Remember, just 0.8% lower, so you will not see very large losses on the banking names, but there are enough and more stocks which are correcting. Okay, let's start with the winners first, and you will see L&T, some IT names like Wipro, Infi trading in the green. So it's a good day for IT yet again, and its momentum continued for some of those. Let's swap the names as well. The losers include Shriram Finance, Kotak Bank, off the lows of the day, but certainly in the red, and Airtel has actually had a sharp pullback as well in the session today. That's about 2 percentage points lower. IndusInd Bank, Tata Motors complete the list of losers. Net banks correcting, IT holding out, but HDFC Bank still being the top point contributor on the gaining side. What are the broader markets, Samina? Good afternoon.
Good afternoon. Quiet. It's the breadth is almost at 1:1. The bias is on the downside, but nothing major to worry about, I'd say. This is more or less on expected lines. We had expected it to consolidate, and that's exactly how it's playing out. After 5 straight days of gains, the markets are seeing a little bit of a breather in today's day of trade. No trend that's emerging just yet. So if you look at the gainers across the Nifty 500, they're all over the place. So there's no trend in terms of a sector or sectorial gain that we're seeing, except on the losing side. Brokerages are seeing some pressure this afternoon. That was pretty much the get-go this morning. So your Angel One, Motilal are deeply in the red on back of SEBI's recommendations on uniformity of brokerage charges. Angel One on back of that is down 9%. Motilal as well taking that not too well, trading with a 4% cut. Anand Rathi is probably better off than the rest. It's down about 1%. BSE is also having a bit of a knock in trade this afternoon. Apart from that, the rest of that space doesn't look too bad, to say the least. On the other few names that I want to quickly mention is tire companies that are seeing some profit taking after Friday's up move. Yesterday was quiet. Today is no different. Maybe just a bit of a break before they resume the upward journey, and that's what most technical analysts believe too. Well, one stock that I want to highlight, I don't know what's going on, is JK Paper. 19% up move on the stock. Volumes are also looking very healthy. I will try and seek out what's happening on that counter, but for now, it is your top gainer on the Nifty 500. Archean Chemicals as well. Now, this is one that we've talked about quite extensively in the last few weeks. After, of course, it's been in the news. It's an expensive stock, but there's so much that is going on, right? We do believe that there are articles doing the rounds, they could be now looking in the semiconductor space, and that could be the big trigger on Archean Chemical. Last week at Bain Piramal actually exiting the counter after the loan that they lent to the company was made good. Supply was, of course, spurred up and picked up by the likes of a Goldman. Apart from that, media is not doing too badly. Solar Industries is looking good. Deepak Fertilizers. So fertilizers are doing fine. Godrej Properties had a little bit of a land acquisition yesterday. Stock did nothing on back of that. But of course, this afternoon rather, is having a pleasant day. Pull up Allied Distilleries. There was a new listing on the street. Did quite well in opening, was up, got a debut on the street, was about 13-14%, holding on to that. So 317 is what it opened at, 316 odd is what the stock is holding steady at. Banks are looking a little weak. Wipro from the tech pack is leading out today as well after the double upgrade that came in from CLSA. But Aditya Agarwal and Dharmesh Kant will join in now with their view in the markets. Aditya, today's flat trade is an opportunity to go long.
Afternoon, Samina. Thanks for the show. I would wear it out. I think there'll be more consolidation that we will see both on the Nifty and the Bank Nifty. I don't see a runaway rally in the markets just yet. Markets are sitting slightly at overbought levels on shorter term time frame charts. So I believe there could be some more cool off. Not expecting a major sell-off, but yes, there could be 150 point cool-off on the Nifty, and a similar kind of cool-off that we witness in Bank Nifty today could be more of a sideways consolidation phase. So if I talk of levels on the Nifty, definitely 24,000 is acting as a major support for the Nifty. Till the time 24,000 is broken, I'm not going fresh short on the index until the time this resistance of 24,200 is taken out decisively. I'm not looking to go aggressive long on the index as well. So overall, it's a 200 point range at the moment, which the market is playing. And I believe this will continue to do so. We will have bouts of volatility within that range. We witnessed that in the morning today. Talking of Bank Nifty, on the downside, 52,000 is a major support area for the Bank Nifty. If that is broken, then maybe there could be shorting opportunities for another 500 point drop on the Bank Nifty. However, on the flip side, if 52,000 is held, I think so between this 53,000 and 52,000, Bank Nifty will also continue to oscillate. And we could see some outperformance from large cap private banks, as Niraj had also pointed out. HDFC Bank is something which is standing out, and I believe it's time for HDFC Bank to show that strength and continue to head higher from here on.
Oh, that's HDFC Bank. Large cap, in fact, has assumed leadership in the recent past at least. And banks have ended on 7 weeks of straight gains. Aditya, does that also mean that you'd go long then on Bank Nifty at these levels?
I wouldn't shy away, Samina, from going long on Bank Nifty. After that correction in trade today, actually took support at that key support level of 52,000. And I believe with the stop loss just around 52,000, I wouldn't mind going long on Bank Nifty for a target of 53,000. Again, because it's still range bound, I would look to just play that range. So 52,000 will be my stop loss, or maybe just below 52,000, and 53,000 will be my target. I won't mind going long on Bank Nifty at current levels, yes.
Okay, just before I get to Dharmesh, though, Aditya, sorry, did you give out your specific stock recommendations for the afternoon?
Yes, Niraj, I've got a couple of buy recommendations, and one is from the pharma space. Sun Pharma is looking interesting to me. Again, sticking to large cap names because I believe large caps will continue to outperform. So Sun Pharma is looking interesting to me at current levels, offers a good risk to reward as well. On the upside, I think stock can test levels of 1640 with a stop loss at 1480 on the downside. I look to go long on Sun Pharma. And Balrampur Chini, sugar is again bouncing back, and I believe just before the budgets, sugar will remain in focus, just like fertilizers. And Balrampur Chini is looking interesting on the charts as well. So I'll go long on Balrampur Chini for a target of 460, 470 on the upside with a stop loss at 423 on the downside.
Wow. Well, it's an interesting day. Banks are quiet, IT is doing well, but Chini or sugar or paper, a clutch of those names are coming into the fray today. Dharmesh, great having you. Thanks for joining in. We've been talking about how IT's done so well in the recent past. Today too, on a sluggish day, IT is still marching ahead. Are you a buyer here? And if so, are you preferring the mid-sized names over the large cap names, or is it the other way around? What is it that you like here?
Yeah, good afternoon, Niraj. I mean, it's the story same. If you look at the last quarter, before the earnings commenced, there was a huge buying which happened in IT space, and the thought process at that point of time was the guidance will be much better and the worst is behind as far as discretionary spend for the IT segment is concerned. I think same is the thesis which is being built on now, having regard to the Cognizant earnings where they revised their downward guidance upward. So the other way of looking at it is that the bottom is already in place. Nothing bad can happen from there. And if that is the case, then it does merit, trading buy kind of environment. Having said that, we are not biased in IT at all. I mean, none of our recommendations for the past 2-3 months have gone into IT space. We are looking at it from the sidelines because if the trade materializes, then it would be really a long-term trade. But as long as the guidance downward trajectory and there's some actual good body language coming from the management other than the guidance part, we are on a wait and watch mode as of now. So IT as a trade, momentum trade is going on. One can play it out. But fundamentally, I think let's wait for 2 weeks. The earnings will be there, and then it will be more clearer whether it's a long-term bet or it was just a trading pop as happened in the last 2-3 quarters.
Right, Dharmesh, what's happening on, I don't know whether you've noticed, but have you seen what's happening on JK Papers? I mean, it seems like a sector that was dead and gone, but with schools reopening after summer holidays, maybe that could be a trigger. Any idea what's happening on JK Paper?
It's just a trade, Samina. I mean, if you look at the texture of the market right now, I mean, Niraj just mentioned Chini and paper and all these stocks, flaring up. So where the attention is least, people are, getting into there, and then some frenzy will happen, some more retail participation will come in there. And that would be a time when profit booking will start happening, at least in these sectors. So they are not a secular trending kind of a structural bet on a sector. So please be mindful of the facts if you are entering into a sugar stock or a paper stock and similar allied stocks, to name a few. Even the fertilizer falls into the same basket. So I don't see any reason why. I mean, there's a shift, and we are going paperless anyways. So more and more paperless kind of a schooling and everything is happening. And in that, paper trade can be a packaging kind of a form, nothing more than that. So Valuation wise, yes, they were comfortable. If you look at just the PE multiples and all, and compared to the other in the middle small cap or micro cap basket. So I think it's just that catch up trade which is happening out there.
Aditya, what's happening in tire stocks? Friday was a strong day for tire companies, and Monday they took a break, and today as well they're looking a little somber. What are the charts of JK, Apollo, and Seat looking like? And if you've got a preference for a long trade on either of them?
Samina, I think it's just a cool off phase after that sharp up move. And what is interesting is if I take a look at all these stocks, the 2 days of correction that we are seeing, it's on back of shallow volumes. So that is a good and a healthy sign for all these stocks, which tells me that sooner or later these stocks will resume their uptrend. And I'm still gung-ho on these stocks, be it a Polo Tire, a Seat, or a JK Paper or JK Tire. Name them, and I still believe there is upside. If I have to pick one, maybe just purely based on the chart setup, JK Tire is something which is looking very interesting to me still. Volumes are very interesting in the stock in the up move, and it's a slow starter, I would say, where most of the tire stocks are trading at all-time high. JK Tire is something which has just resumed its uptrend. So I believe the cushion is here more. The risk to reward is in favor of going long in JK Tire at current levels for a target of 530 on the upside with a stop loss at 450 on the downside, or maybe 440 on the downside. I will look to go long. The second in my list will be an Apollo Tire. That is something which is also looking very interesting to me, I think. So 560 will be the target here. With a stop loss at 520 on the downside, I'll look to go long.
Right. Another one that I want to quickly talk to Dharmesh about before we go into a break is the listing today. Allied Distillers. There was some capital requirement problems, but from what we understand, it is a fairly strong brand. They've struggled in the last few years because of working capital challenges. I know it all depends on execution now. But what did you make of today's listing, Dharmesh? Allied Blenders, is it looking like a good stock to buy?
I mean, Samina, the company is good, business-wise performance are good, but as a group, like there's a call at alcohol or beverage company, so that's the reason why we have not come out with a note on this company.
Okay. Well, we'll take a break, but before we take that break, hear out what the management of Allied Blenders had to say. The stock listed with a 13% premium, and we caught up with the management on the road ahead for FY25 and the use of IPO proceeds. Listen in.
As you know, the object of the issue is to pay off our current debt and retain the balance for general corpus, which I largely put as growth capital. How we see the future, the focus is on premiumization, looking beyond our current portfolio to get into the premium and luxury segment. We are looking at augmenting our E&A capacity, try and go 100% captive over the next couple of years. And that gives us both an edge in terms of backward integration and also in terms of the product portfolio that we have in mind.
Right. Mr. Ramaswamy, my next question is to you. In terms of new products, any new products that you're planning to launch in FY25? And if yes, how will this aid your revenue?
We have a product launch every quarter. That's what we have planned. And the first launch was in the earlier quarter, which was Zoya Gin. And we have more launches going forward, and all the new products will contribute to our premium segment in a big way on the future date.
welcome back. We also have with us Rahul Samina, Director and Head of Research of JM Financial, joining in. Rahul, hi, it's Samina. Thanks for joining in. Rahul, we've had a very good run actually. The first half of this year, the Nifty is up 11% for the month of June. It's done about 6-7% returns despite that big volatile trade that we saw on election day. There is talk about an impending correction, an impending weakness, which still hasn't happened. From where we stand right now, do you feel like there are signs of tiredness, the market's being overbought, which could then mean that a weakness is around the corner and going short on the Nifty could be a good trade?
Yeah, hi, very good afternoon. So, basically the market is extremely polarized as we speak. We have record high positions by FIs in index futures, record short positions by retail in the same. We have FIs which have been pumping into the cash segment for 3 consecutive weeks now. This week also seems like it's going to end up positive. So, essentially what is happening is the market is firing from all ways. So, something like a Reliance, which was an underperformer, has started participating. And whenever markets get into that kind of a zone, I become fearful. And, we've been advising our clients to take profits, especially from those stocks which have done like massively well. So, if we look at some of the capital goods names, they are as overbought as they have been the highest in the last 10, 15, in fact, 20 years as well. So something like a Siemens, ABB, these stocks have done extremely well. So, these are the pockets where we feel profit booking can be done. And there are about 3 sectors which are sort of re-emerging from, a long period of underperformance. So we have IT, around 3 years of underperformance. We have chemicals, around 4 years of bear market. And, we are seeing a bit of a turnaround happening in the pharma space as well after the recent consolidation. So these are the areas of the markets where we feel money can be moved. So sector rotation is the call for the day. We're not expecting like a big bang correction in the market, but yes, a periodic correction of around 500-600 points on the Nifty, which is hardly about 2%-3% kind of a correction, is something that will be a welcome correction. Even if it doesn't happen, we are actually sticking our head out and saying that the markets could get into 2 months of time correction. So which means a broad range in the Nifty consolidates, sector rotation happens, stock-specific action can be paramount.
Rahul, do you feel the same about Bank Nifty as well? Some may believe that there could be outperformance. It has logged in 7 straight weeks of gains. What's the view and the trade on Bank Nifty?
Yeah, so the view is private banks have done exceedingly well in this run-up, and a lot of those FI flows have gone into these blue-eyed boys like HDFC Bank, ICICI Bank, Axis Bank. Our suggestion is private banks take some profits off the table. Probably you can switch to PSU banks. And Bank Nifty as a whole is sort of, gone into that, correction even before the Nifty. So we feel that a dip up to around 51,000 on the downside would be an ideal re-entry level. So at this point in time, we are advising clients to take profits and sit on the sidelines. Sometimes no trade is also a good trade. So, that is our stance on the banking index as well, which is in line with, what is also happening in the Nifty, especially after we crossed the 24,000 mark. Somewhere we've lost momentum, the way we have been moving in the last few sessions. It seems like definitely there is a change of hands happening.
Okay. So Rahul, I understand there is a note that you have come out with which speaks about a large list of stocks that can be bought and sold. We obviously can't discuss all 50 of them, I believe 25 each side. But let's try and talk about maybe the top 3, if there is a pecking order in the list of gainers as well as the losers, or the potential gainers and losers.
Like, the 3 sectors where we feel the maximum alpha could be generated, say 6 to 12 months down the line from here, could be, one is the IT space. So from the IT space, there are 2 stocks which are part of this list. One is Wipro and the another one is Tech Mahindra. We've seen these stocks doing well over the last few sessions, but we feel this is just the beginning. So, we are seeing upside of more than 20 to 25% in these stocks, and these are sizable IT, plays. Then on the pharma space, we like DV slabs and granules, which is where we feel this sector already has been doing well, but after the recent consolidation, we feel the time is right for them to see a follow-up move coming into going into the next couple of quarters. And thirdly, chemicals. Now, chemicals is something which has been in a proper bear market. It hasn't participated at all. The biggest name in that list is Deepak Nitrate. We feel there is a big upside to be had. It has been, a very, very flat. If you see the monthly chart, the stock has gone nowhere in the last 3.5 years, and feel now the time is right for the stock to change orbits. In the same sector, we also have something like a Fine Organics, which is, slightly smaller market cap, but we feel can be a high beta play. And, we also have a dark horse in this entire list, which we feel, could be a multi-bagger as well. So Walchand Nagar Industries, we've included as a dark horse. The stock has been hitting upper circuit since last 2 odd sessions, but we feel the kind of headroom that the stock exhibits technically, it can be a massive wealth creator. So it's a dark horse. So, it's high beta, high risk, high return kind of a stock. But essentially these 25 stocks are where we feel there is, the biggest opportunity can be had going into the next 6 months.
Walchand Nagar Industries up on 5% yet again. But interesting that pharma and chemicals feature in that list. Again, a sector that both sectors haven't gone anywhere. Rahul, what about the losers? I heard you say that cap goods look very, very ripe. Is that a part of the top list of shorts?
Yeah, so we're not essentially recommending to short, but the call is to book profits.
Sure, okay.
So just to give you an idea, so for example, Bharti Airtel is having the time of its life, 4-year cycles. It has been in a 4-year bull cycle. Seems like, it is very close to maturity. On the capital goods space, we have the likes of ABB Siemens, which have done very well. On the auto space, we have Mahindra, and we have, Bajaj Auto, which have been in the pink of health. So essentially what we've done is, the last time these stocks were overbought compared to how overbought they are at this point in time. So it is essentially being overbought in a 5 to 10 year time frame. So, we are, the best thing to do is book profits from these stocks and move it back to, some of the names that we've discussed. So, we're not only giving you stocks to buy, but also, somewhere you can raise capital in case you're holding them in your portfolio. This is a good time to, take some money off the table.
Rahul, another sector that is catching attention in the last couple of days is tire stocks. Some of them are the record highs. Are they on your buy list, either on the sell side or the buy side? And if yes, what are the picks there?
Yeah, so from the tire space, we've gone with the, one of the giants, Balkrishna Industries. We feel, the stock, the sector is doing very well, and technically speaking, the stock is ready for, a gear shift. We feel that at least 20-25% upside can be had even in this counter. It's a big stock for sure, but given the way the tire stocks are placed, be it Apollo Tires, be it Balkrishna Industries, we feel that the sector should do well going into the next few months. So Balkrishna remains our top pick in this space.
Well, thank you, Rahul. We'd have loved to chat with you longer, but I guess you are out of time. We'll hopefully see you soon again. In the meantime, keeping the focus with tire companies, we caught up with Manav Chopra of Nuvama earlier in the day. He got the call on IT quite right only a few days ago, and we've seen a breakout of sorts across IT stocks. He, in fact, is extremely constructive on tire companies, his top picks being Apollo and Seat. Hear out what he has to say on the tire space.
Lately, we've seen how Seat and Apollo Tires, which are our top bets, formed a strong base around 100-day average and have started to witness an early signal of breakout. So from here, my upside for Seat is close to the levels of 3,700, which is still 30% from the current levels. And Apollo Tires, my upside target is close to 720. So, in general, when the markets are at 24,000 levels, it's very difficult to look for the ideations coming for a very high risk reward. And tire definitely suits that space very well.
It's interesting what these tire stocks are doing. What we'll do is ask Dharmesh Kant on the fundamentals of these tire stocks on the other side of this quick break. But we need to slip into one. So let's do that. Come back, talk more about tires and some others. Stay tuned. All right, back with India market close and quickly go across to Agam to break down the derivative cues for us today. Agam, good afternoon.
Good afternoon, Niraj. Well, today is a day where there was a little bit of quiet as far as markets are concerned, perhaps a wanted one, because at the moment, of course, the Nifty is currently flattish. We've seen a little bit of weakness in your banking and BFSI indices today. So the bank index is down by around 0.7%, but we're still holding on to 52,000, and that is the big positive. Sure enough, there has been a little bit of selling over the past couple of sessions, today including, but we haven't too much to worry about. In terms of the options market at the moment, considering the fact that the Nifties are hanging on to 24,100 and thereabout, we've seen a little bit more writing around 24,000. Remember, since the morning, we've been talking about traders trying to defend 24,000 on the lower end, and we have more writing around there. Until yesterday, we had or rather day before, we had a considerably higher amount of open interest distribution around 24,500, and now it just so happens that we're starting to see a little bit stronger base formation around 24,000 moving in. At the moment, it does seem like it's going to be a tough support to take away on the Nifty. Fin Nifty, of course, 23,500 was what was in focus, and it does seem like we're going to be closing around there. That's where we're going to see this particular weekly options expiry to come through, as indicated by puts and calls in terms of OI. Finally, coming down to stocks, it's been a mixed year of trade for 1:1 in the broader markets, one gainer to one loser. Deepak Nitrite and MGL are actually looking at a good amount of traction in increase in open interest. There's some shorts in Shriram Finance and SRF as well. And among stocks which are seeing unwinding, we have about a short covering for Dr. Reddy's and Muthoot Finance. And on the other hand, longs unwinding for Federal Bank, ICICI Bank and Coromandel International. As I've been mentioning, it's been a mixed market. And today is one of those first few days since that sharp rally that we've seen, is where we're starting to see just a little bit of fatigue flowing in. The question really is, can we expect consolidation? That's something that we're going to keep an eye on.
Indeed, Agam, it's going to be a little bit about consolidation, the look of how, or what at least what analysts seem to believe on the street. Dharmesh, we didn't talk to you about tire stocks. You want to give us your view on tire and, of course, other ancillary as well. So maybe lithium battery guys, Exide, Amara Raja in the auto ancillary play.
Yes, I mean, as far as tires are concerned, I think it has more to do with the cool-off in the international prices of rubber. It has gone up significantly for this year. It was up 14-15% few days back, almost around 185 USD cents per kg. It has cooled down to 165 USD cents per kg. So that cool-off leaves around 3.5% kind of a year-till-date gain on the rubber prices. So that trade was on the tire companies. And here, I think, seeing the automobile numbers for the month gone by, it's around hardly any double-digit kind of a growth. 6 to 8% is where most of the players are expecting on the OEM manufacturer side, be it two-wheelers, three-wheelers, passenger vehicle, and MSME or CV segment. So all of farm equipment inclusive, all are facing heat out there. So I think JK Tyre among the tire pack looks very attractive because it's not a pure OEM player in supplying the tires. It's also into the replacement market. It's a fair mix of both. At the same time, the return ratios are very high, around 20% plus kind of an ROE and a CAGR of 30% for last 5-7 years as far as PAT is concerned. So that play looks strong. On auto ancillary side, I think as far as battery plays are concerned, a large part of it has been done through. Now it will go for a time consolidation before actual rollout of EV batteries happen and then the trade begins. But there are interesting plays like JBM Auto, Uno Minda, Craftsman Automation, Rolex Ring, which is again into the auto ancillary space catering the both the segments. So those look pretty attractive. I won't be able to argue on the valuation front because they are expensive, but that is how the entire scene is as of now.
Okay. Yeah, and some of those themes have done really well for themselves. Dharmesh is right, but just the kind of moves that we've seen in an Uno Minda or a Craftsman Auto or an Atul Auto today as well, 7% higher by the way, 6 straight months on a trot, it's delivered 100% growth. That's quite something for an Atul Auto. Actually, Aditya, come in on Atul Auto because, there were two stocks which were up on a 20% upper circuit yesterday that we had marked, Wockhardt and Atul Auto. Wockhardt has given up some of the gains. Atul Auto has only built on from there, up another 7%. Can it do more?
I think so, Niraj. Provided you already own the stock, I would not recommend going fresh long at current levels. If you already own the stock, yes, continue to hold. 830, 860 are my two targets on Atul Auto. Just a disclaimer here, this is one stock which has been recommended to our clients and they still hold in the portfolio. But having said that, yes, massive volume. And this was on cards, Neeraj, because we had a long consolidation from October 2023 till the breakout that we saw a couple of days back. So this long consolidation had to give way and it broke out on good volumes. And today also we are seeing good volume as well. So I think this is a follow-up move which will continue, and at least 830, 860 should be seen on the stock very soon.
Aditya, how do you feel about Vodafone and Bharti right now?
Samina, surprisingly, I would look at an Idea Cellular at this point of time, Vodafone Idea, because this is one stock which is now showing some kind of a breakout and a pull throwback. So we did see a breakout last week, and now it's showing a pullback again. But I think stock is poised to again break out above those levels of 19. And once it does so, I think stock can test levels of 25 to about 27 on the upside. So if I have to pick one between Bharti Airtel and Vodafone Idea, I would go for Vodafone Idea, because Bharti Airtel, I think, has done its bit for some time, and you could see some kind of a price correction in Bharti Airtel, at least in levels of 1350, 1300 on the downside. On the flip side, Idea Cellular is gearing up for a breakout again from that resistance of 19 and can test levels of 25, 27 on the upside.
That's the word on Vodafone. Dharmesh, fundamentally, want to come on Vodafone, Bharti? After the price tariff hike, the stocks have been almost exhibiting the buy the rumor, sell the news kind of trade.
I mean, in the short term, it does look like that if you are looking just from trading perspective. But look at Bharti for the last 6 months or 1 year time frame. The stock has consistently given you a positive return, and it's been the higher end of the basket. At the same time, I do believe the guidance given by the management of ARPUs reaching 300, and that would be the case in point for all the companies who are into this play, because the data usage is the future, and the RPUs will definitely rise. So return ratios and everything will fall into place to justify the valuation multiple. So short term, I mean, selling is there, but I mean, that's a punt, and I am again going with Aditya on this. If I have to buy one telecommunications stock at the present juncture and keep it in the portfolio for next 3 years, it has to be Vodafone Idea, because the type of bidding they did for the spectrum auction, I did not expect that kind of an aggression coming from the management. And such aggressions are not aggressions. I mean, they are backed by a good planning and strategy in place for the next 2-3 years. And management sounded very positive on the 5G rollout and the coming back into the system. So I think slowly the pain and worries will go away. Most of the debt will be converted into equity. And then once this pain is out, it will have an entirely different relook and re-rating as far as valuation is concerned. So we are expecting almost a doubler from here for Vodafone Idea. But that's a time horizon of 3 years. And as of now, it's more of a punt than a pure, calculated valuation play.
Okay, thanks a lot for that, Dharmesh. And let's shift our focus to IT, and Rucha joins in to talk about some key excerpts of a JP Morgan note which highlight, Rucha, some very interesting trends about what end clients are spending and how not all IT companies will benefit out of those spends.
You're right, Niraj. So I'll first start with the budget expectations that JP Morgan has come out when it surveyed 166 CIOs. So the budget is expected to accelerate to 4.1% in CY24 from around 2.5% levels, but again come down to 3.5% levels in CY25. So this is what they are looking out on the budget by the clients. So a likely uptick in the calendar year 24, but again come down in the calendar year 25. Now looking at the spending actions, while majority of them expect no change in the current pace of IT spending, only 25% of them are looking forward to accelerate the investment in the IT budget, while 33% still talk about deferring and delaying, which is what we saw in the other Indian IT companies as well. Now, this deferment was largely because of uncertain macro environment And US elections is also what the CIOs pointed out to the brokerage house, while the acceleration was largely led by catch up in the technology, which as we saw is just 25% of the overall pool. Moving on to generative AI. Now, this has been the talk of the town. So the brokerage house expects that from the current 5% levels, like 5% of the total budget is what the clients are currently spending on generative AI. And this is expected to move up to 14.5% level. So this is what generally clients are looking at. And still 33% of them moving on, 33% of them are shifting funds from the legacy system to to upgrade themselves to generative AI. So again, 1/3 of them are looking forward to spending on generative AI, while more than 60% of them are still just waiting and looking how the macroeconomic environment turns out for them and not reprioritizing their spends with respect to generative AI. Now moving on, around 8% of the total clients which currently use TCS as their vendors are looking forward to increase their spend with their vendors. So for example, if 100 clients are using TCS as their vendor, only 8% of them are looking forward to increase their spend with TCS. This number is 11% for Cognizant and 10% for Capgemini. But interestingly, 9% of Accenture's clients are looking forward to reduce their spending with Accenture. So this is what stands out, and this can give us a perspective on how the macroeconomic environment is pertaining for the clients over here. Moving on to what JP Morgan expects and what are their preference of the stock. It prefers defensive stocks with high dividend support such as TCS and Infosys, but they also prefer high growth stocks such as Persistent, Coforge and LTTS. So this is what we have on the entire CIO's survey that JP Morgan has come out with.
Interesting. That's thanks for that, Richard. That gives you a sense of where budgets are skewed towards and what, of course, when JP Morgan spoke to the CEOs, or where they really feel the business is going to be sitting in the IT pack. So while budgets are going to increase for calendar year 25, it seems like they will ease off in the following year. Well, I don't know whether we've asked you, Aditya, but you've got any tech favorites that you're currently trading on?
Absolutely, Samina. In fact, I think tech is the place to be, definitely. I've got a couple of favorites. I would say rather than entire mid-cap and the large-cap IT space should definitely do well. If I have to pick a couple of stocks, maybe from the mid-cap space, Persistent Systems will stand out. What a recovery it has been for the stock from those levels of 3,200 to make an all-time high in trade yesterday. I think it's just the starting point for the stock again. It's resumed its uptrend, can easily test levels of 5,200 on the upside. But from the large cap space, couple of stocks definitely stand out. TCS is something which is looking very interesting to me. I think it's yet to break out of that resistance mark of 4,200 decisively and trade above that. Once it does that, I think it's getting up for a level of 5,000 again on the upside. And apart from that, Infosys is also something which is looking very interesting to me. So overall, the IT space is looking very interesting. Three top bets within this space are Infosys, TCS, and Persistent Systems for me.
Yep. Okay, that's as far as IT goes. But what else is moving? I think if you just look at the list of names from banking, for example, HDFC Bank has done well, but the others have not. So that is as far as the banking update goes, and that stock is still at 1732. Apparently now having a multi-year breakout as well. So keep an eye out for that one. Stocks, Allied Blenders keeps on featuring in this list. By the way, have you spoken about the IPO? Yeah. Dharmesh has spoken about Allied Blenders, so I'll avoid that question. Dharmesh, any mid-cap name that you've recommended recently to clients?
Yeah, I mean, that was dissect system. We had an initiating coverage on that way back at 284 kind of a price. And the theme was that it's into EMS segment with backward integration for manufacturing of PCBs as well. And they had already a tie-up with Delta of Israel. It's a defense company, 95% of them, of the revenue comes from that. And they had tied up with Lockheed Martin, Rafale Advanced System. And recently, a day back, they got an order from L&T. So that opens a new chapter for them. The management sounded aggressive about the order book inflow. So last quarter, it was 1,600 for the March quarter gone by. This quarter, they are almost done around 1,350 odd crores kind of a fresh order book. And they're expecting 3,500 to 4,000 going forward into the calendar year. Our own sense is that they did a 70 crores kind of a bet, so it's likely to be 123 crores based on FY26 earning. So there's the valuation comfort is there if you play it out as a defense company. So, and that's basically into the entire EMS is into the defense space. So based on that, our target price was 379. We have not revised that as of now. It's a hold rating on the stock, but we soon after this quarter earnings are through, we would be revising them. One important aspect out here is the new orders which they are getting is better margin accretive from the ones which they were getting earlier. So there's a shift in the entire business play or the product play they would be offering into. So it's due for multiple re-rating, but one step at a time. As of now, we have a hold rating on that.
Ramesh, in fact, we caught up with the SCX systems earlier. The stock is trading with a 13% gain. They've bagged a pretty large order from L&T as well. Hear out what the management had to say about the order book, the execution, the kind of top line they're targeting in the near to medium term.
We will not expect PO to add every month or quarterly. Okay, this all in the, now you see the single PO, largest PO, which is received is at one shot is 1,250 crore. And last year, what we have order book and we are executed in the March, we completed. Then we had about 800 crore backlog of March 31st. Then there's a cable order has come about 32 crores. And now we added currently our order book about nearly 2,000 crore. And this is the scenario of defense. We get maximally, when we get a big order, we'll get and keep on working that. And also the pipeline, what we are expecting is the very good pipeline, which we are almost closing in the couple of weeks or couple of months. We expect a very good, healthy pipeline order. And our POs comes in the large value. Okay, and especially on the system integration, the electronic module, and those things. And it is not like every month we are adding a PO with this thing. In the defense sector, it is very, very normal case where the defense company get a PO in the every day or every month. We'll get a PO in the big POs in the about 4 to 5 times in the year. So the company is focused to increase order book. I'm not seeing any challenges because we improved our customer base. And now we are added last year, 2 years, 3 years back, we added Bharat Electronics in the domestic area. And now we added L&T. Now in the international level, we added Lockheed Martin. Now, apart from the many Israeli clients like Rafael, Elbit, Delta, IA, the whole group. And we have a good customer base now. We expected to get more pipeline order, which we are already working. It's a matter of time. We expect a big pipeline order. It's a very healthy order. And that also is in a good size of the business we are expecting the POs.
So Dharmesh, if he gets all of these orders, etc., is it now a bad buy, the DCX, with all that he's saying, even though he's up about 13-15% today?
No. I don't think so. It's a bad buy. Why we have not, upgraded is just because we wanted to see a quality earnings, which would be due in some days. Post that we would upgrade it. But just doing a back of the envelope kind of a calculation and giving it a PE multiple of 50, around 550, 560 should be the valuation target based on the trajectory which they have done. They have never got such a big order of 1250 crores to be spread over a period of 3 years, definitely. But this is the beginning, and the management spoke about that. Plus, they have a NIAT system. It's a object detection system for the railways, which they have developed, and the product has been tested and things are in place. Only after the budget, the allocation is likely to come. And this was on the request of Government of India, they have done that. So some order flow from there is also likely to be on the cards out there. So once all this comes through, we will be better placed to have a valuation multiple and whether we go for re-rating. But as of now, it does look like, and the rough calculation does suggest 550, 560 should be the valuation target based on 2 years earning. With the good trajectory they have been backed on. So not a bad buy even at current levels.
Got it. Okay. The question is solar industry is a good buy at these record highs? It's touched a market capitalization of 1 lakh crore. Puneet, What's happening? I mean, they've disclosed a new explosive formulation as well, certified by the Indian Navy. What's happening to keep Solar so excited?
Well, we have looked at, Solar and what has it done in the past year as well. And the stock as well as the financial performance has been very strong. Today it's buzzing on volumes of 4 times its 30-day average, stock at an intraday high of almost 11% as well. But when you look at the financial year of 2024, the revenues were down 12% in this particular year, coming at roughly 6,000 odd crores. And the management highlighted that the 2 key geographies that they cater to, which is Turkey as well as Nigeria, they both were affected due to currency devaluation. Turkey has seen currency devaluation of roughly 62%. Nigeria has depreciated roughly 100%. But this was just a one-time impact of roughly 900 crores. They are saying for next year it is positive outlook. What could potentially be driving the stock is the defense part of the business. It's currently a very small part of the total revenue of 6,000 crores because explosives is one of the main caters and the main revenue drivers for the company. Apart from that, we have seen that it's also very explosive is very strong margin business as well. So for the financial year of 2024, they reported 23%, which is up by 400 basis points. Within the segmental revenue as well, currently roughly 40% of the total revenue is coming from exports, 15% comes from directly from Coal India, and apart from that, other verticals such as housing and infra are also one of the key contributors. But going back to what the company has said, they have reduced debt in this particular year as well, while increasing capex to 668 crores. And order book currently stands at roughly 5,100 crores. And here's the interesting part: out of this, half of it is roughly coming from the defense bit, which is around 2,600 odd crores. In this particular year, revenue from defense was just around 500 to 800 crores. So management has guided that this will increase to 3x in financial year of 2025. And most brokerages is also positive, with 4 of them having a buy call. Do know that the stock has run up a lot in the past year. It's up 195% in just the past year and 62% in the year to date. But the defense piece is what's driving the news, as well as guidance on the next year is very strong. Back to you.
Right, that's why Solar Industries seems to be catching attention in trade today. 9% gains on the stock. Aditya, that was a fundamental reason that, of course, Puneet highlighted for us and what's happening on Solar. But technically, how does Solar Industries look at these levels? Would you play into the strength?
I would, Samina. It's a very strong looking chart setup, and time and again, every mild correction gets bought into. I think a matter of time before stock touches 12,000 odd levels. So if you get a dip, maybe closer to about 10,600, 10,700 on the downside, you can buy some at current levels. If you're looking to add more on declines, maybe 10,750, 700, 800 is a good level to add further, and look for a target of 12,000 at least on the upside. A very strong looking chart setup, and I was hearing volumes are also there in the stock, so definitely it's a buy list. It takes the buy list.
Well, what's as we wrap up, Aditya, what is your top closing strategy for the day?
Niraj, I was looking at the chart of IREDA. It looks very interesting to me. Having said that, I think markets will remain flat, as I mentioned at the start of the show. I don't see any trade in the Nifty or the Bank Nifty as such. Bank Nifty may be a long trade, but stock specific, I think IREDA is something which is looking very strong. It's breaking out of that consolidation. Rather, it just broke out as we speak on good volumes. So I think 230 on the upside is a potential target for the stock, with a stop loss at 200 on the downside. It looks like a good trade to take. Maybe a BTST also can be done here.
That's IREDA. That looks good. 6.5% gains. Those numbers that they posted yesterday in terms of quarterly update were actually quite good, and you're seeing a move on back of that. Very quickly, Aditya, I don't know if I asked you about this, but you've given us a BTST. What about an STBT? We are seeing a lot of pressure on these brokerage names today. Do you feel like the weakness would continue into tomorrow? And if yes, then maybe a short trade cannot be ruled out. So an Angel One, an Anand Rathi, Motilal are all under pressure.
Samina, none of them are in the FNO space, so you can't short and go. Unfortunately, maybe you have to look for a fresh short in trade tomorrow. But just looking at the chart setup for these stocks, the stocks did correct on good volumes. But I don't see too much of a decline in any of these stocks. I think it's a 1 or 2 day of correction, and rather, if anything, you getting an opportunity to go long on these stocks. If you were waiting to go long on these names, given the fact that the number of users are going up, number of activity on the stock markets are going up. So these are the plays that you would play out actually. So I think Angel One is something on declines. It's a good stock to latch onto. I think rather than going short, you should look to buy the stock on declines.
Okay, so buy the stock on declines. Dharmesh, before we wrap up, are you buying into any of the brokerage names, the top losers today?
No. As a rule, we don't, recommend.
Oh, okay, you can't. Okay, fine. Then let me ask you a counter question on a positive pocket today. Real estate was very active. Godrej Properties and some of the others. Anything out here which is a favorite?
Yeah, I mean, the space three stocks looks very attractive. Even the valuations are stretched, but the things are happening quite fast. One is Godrej Properties, other is Oberoi Realty, and the third is the Phoenix Mills.
Phoenix Mills, Oberoi Realty, and Godrej Properties. Interesting. Phoenix Mills too, 3578. Great mall play as opposed to just being a pure real estate play. So bear that in mind. Last question before we start wrapping up the markets, and stocks which have been the best performers per se, or the worst performer if you will. The worst performer list of course includes names like Angel One, Max Health and Motilal Oswal, which is also corrected 4% in trade, and some of the holding companies too have come off by the way. But JK Paper, EPL, so EPL has a brokerage node and that stock is up 9%. As we wrap up, the erstwhile SL Propack and currently EPL at 219. Aditya, what do the charts say?
Niraj, a good point out. A good stock actually. This was on my radar. I did not track the stock in trade today, and it's up on 9. It's up 9% on good volumes. It's broken out from that downward sloping trend line. So I would be a buyer definitely in this stock, and more of a positional trade. I would say one should definitely buy at current levels. Look for a target of 280 to about 300 on the stock. That's the kind of target that I'm getting here with a stop loss at 200. You should definitely look at adding this in your portfolio at current levels, or either if it declines by 1% or 2% in trade tomorrow, you should definitely look at adding this stock. And look, don't exit so quickly. Maybe around 280, 300 should be your ideal target.
Right. Well, the market's wrapping up. It's not been too bad a day of trade. There was an expectation of consolidation, and it's consolidated with a very small cut in today's trade. Dharmesh and Aditya, thank you for joining us. But in the meantime, we'll wrap up the last 2 minutes of trade. The Nifty goes home, respects 24,100 quite well, 30 point lower on the Nifty. The Sensex going in with a similar sort of cut. I mean, it's hardly a cut, so it wouldn't be fair to call it that. The Nifty and the Sensex go home flat. Bank Nifty sees some selling pressure. 0.8% lower is what we got across other sectors. If you can pull up tech, which has been a big gainer in today's trade, supporting the markets. Nifty IT was up about 1% in trade. Real estate as well had it quite well in today's session. The breadth of the market was not too bad. There was a slight bias in the first few hours of trade to the downside, but then finally the advanced decline ratio reached a comfortable spot of 1:1. So no major concerns on that either. Across the Nifty 50, your top gainers was L&T. Wipro on back of the double upgrade by CLSA gained yesterday and gained today as well. TCS was up 1.5%. Infosys, HCL Tech all went home with marginal gains. You had Tata Steel that did all right. You had Grasim Cement Industries as well going home with a marginal gain. On the broader market space, I guess the action was a lot more. You had the mid-cap and the small-cap index outperforming the benchmark just a little bit in today's day of trade. So a tad bit higher, a tad bit lower on the mid-cap and the small-cap index. The mid-cap going home with a cut of 0.5%. You had brokerages that were under pressure. So Angel One, Motilal did quite badly. Chola Finance Holding, which has had a 20% gain over the last 2 days, saw profit taking today. BSE also saw a cut of 3 to 3.5% each. Apart from that, you had Info Edge, IDFC, CIAT that saw some cuts in trade, mixed trade for fertilizers as well. On the winning side, Archean stood out for me. There's talks that they are looking to get in the semiconductor space, which could be a big move for Archean, and the stock gain About 7% today. JK Paper has had a good run, 18%. Not sure why paper companies are doing well, but nevertheless, it's a big move in terms of trade. All in all, it was a quiet day. I guess a little bit of calm after the recent up move that we've seen. But with that, we're completely out of time. All eyes will remain on how Europe trades, and of course, Wall Street opens up, and we'll bring you a lot more on the other side. So stay with the channel, and that's thank you from Niraj and me. We'll see you tomorrow morning.